Good afternoon, everyone. My name is Richenet Lafleur. You can call me Rich for short. In today's episode, we're going to talk about Bitcoin versus traditional saving account, which build more wealth. To start off with, imagine you invested $1,000 5 years ago in a traditional saving account or in Bitcoin. What do you think would have grown your wealth more? Today's episode will break down the key difference, the growth potential, and the risk of both options so you can make an informed decision. So to begin with, we're going to break down the basic. Traditional saving account. Traditional saving account have an interest rate. As of February 2025, the national average interest rates on saving account is approximately 0.41% APY. Next, safety. Funds are typically insured by institutions like the FDIC up to certain limits and protecting against bank failure. Last, liquidity. Easy access to funds, making them suitable for emergency saving. Next topic is Bitcoin. Bitcoin have decentralization, operates on decentralized network without central authority control. Supply cap. Bitcoin have at least 21 million coins, introducing scarcity and potentially increasing value over time. And last, volatility, known for significant price fluctuation, offering both high risk and potential high rewards. So Bitcoin and traditional saving account are two areas where we store our wealth. But at the same time, both have different features that will allow you to become wealthy or allow you to have more purchasing power. But as we continue going on this presentation, I will share more information of the two differences. Wealth growth comparison. So with the example and the question that I shared in the beginning of this presentation, we're going to break down what if we have invested $1,000 5 years ago in a traditional saving account and in Bitcoin. So investing $1,000 at the average interest rate of 0.41% APY over 5 years results in approximately $1,020.75. A modest gain of $20.75. So you didn't make no money investing your money in a traditional saving account, only receiving $20, and that's not much you can do. And with the APY data that I receive, I got it from the internet, so this interest rate number may be different the time that you watch this video, but it's basically giving us an illustration that if we invested $1,000 in the last 5 years, we'll make $20, and that's pathetic. But on the other hand, as we break down Bitcoin, historically, price growth shown Bitcoin have significantly outperformed traditional savings. For example, $1,000 invested 5 years ago when Bitcoin was around $10,000 per Bitcoin would be worth approximately $5,000 today if Bitcoin is at $50,000 at this moment. But at this time, Bitcoin is around $86,000, and I have a website that showcases if we have invested $1,000 into Bitcoin around 2020, and this number that I chose 7,000 because I got the data around Bitcoin price around January, and I rounded to $7,000. And with the sale price, with Bitcoin being around $86,000, we would be able to receive at least $12,000 out of that investment. So our profit is really $11,000, and that's a great gain for only investing $1,000 into Bitcoin in 2020. So Bitcoin is the best investment asset at this time because with investing in the traditional saving account, we're not making nothing. We basically just put our money into the saving account and we are just getting pennies. And pennies can't do much for us as we continue living in this inflation economy. The risk versus reward. So the risk and the reward when it comes to Bitcoin and traditional saving account have a lot of different features. To start off with the traditional saving account, the pros are low risk, FDIC insured, and stable returns. The cons are interest rates often fail to outpace inflation, leading to a decrease in purchasing power over time. On Bitcoin side, the pro are potential for high return, scarce asset, and hedge against inflation. The cons on Bitcoin, high volatility, no government protection, security risk from hacking or lost private keys. And to add inflation consideration, with the average inflation rates around 2 to 3% annually, traditional saving account with low interest rates may result in net loss of purchasing power, meaning your dollars are losing value each and every day as you leave your money in a bank account or a traditional saving account that's going to bring you interest, but you're not gaining much because as interest rates continue rising, our dollars are not able to keep up with it. And I have another website that I'd like to share with you guys that's showing the CPI data of all the categories of in terms of food at home, energy, electricity, all the essential goods that we use as human. And the last data that they have put in January 2025 for all items is that it sits at 3%. So currently right now, inflation is at 3% for all the items that we use. And that's making life hard for us at this moment. So we'll have to see where 2025 take us in terms of our inflation. But at the end of the day, our dollars are losing value. And I have another screenshot / picture that I wanted to show you guys that's highlighting a dollar worth purchasing power of the US dollars. So currently right now with this graph is showing you how the dollars have been losing value ever since 1920 when the dollars were created after the Federal Reserve announced to let go the gold reserve. And currently right now, as we are in 2025, they haven't extended the information in terms of years because it's going by 10 per year. $1 is not enough to do anything in our society at this time. When I was younger, in the last 10 years or 15 years ago, I remember where I used to go to the store. I was able to buy 4 things with $1. I was able to buy a 25-cent chip, a 25-cent cookies, and candy for $1. Now, as you go to the store, you're going to get at least 1 or 2 items with $1. Or when it comes to $20, you're only able to get at least 4. So this is telling us that our dollars are not growing. We are losing value every single day. Either you store it in a bank account or have cash laying out under your mattress, you're losing value with your dollars. So your purchasing power is never the same. A strategic approach combining both the traditional saving account and investing in Bitcoin. So first, you always want to have emergency saving if you're saving your money in a traditional saving account. Emergency saving is very important as we live in this inflation society because you never know when you will need your traditional dollars to help yourself out. So the strategy that I wanted to share with the emergency fund, keep at least 3 to 6 months worth of expense in a traditional saving account for liquidity and security. You always want to have your money very liquid, so just in case anything happen in our society where we may go into hyperinflation or things may be bad like a COVID, you just want to make sure that you have money sitting just in case if you need to buy your essential good and just to keep your family safe. Next, investing in Bitcoin. Dollar cost averaging. Invest a fixed amount regularly to migrate the impact of volatility. Long-term perspective. View Bitcoin as a long-term investment and avoid short-term panic selling. So on my last episode, I have shared information about dollar cost averaging, and it's one of the best strategies to apply to your tool belt because it will allow you to increase your purchasing power. You don't have to buy Bitcoin at the whole price. You can continue buying it as a fixed price amount that you want to receive either weekly, monthly, or yearly, but just continue buying Bitcoin as it continue dipping because you'll be able to receive more sats per dollar. Last is risk management. Diversify investment across multiple asset classes. Stay informed about market trend and development. When it comes to diversifying investment, one advice that I like to share with people is that when it comes to Bitcoin, if you all in on Bitcoin, go all in on Bitcoin. Don't diversify your portfolio, because sometimes when you diversify your portfolio, you are slowing yourself from having a maximum gain if you had invested all of your capital into that certain class. But the right kind of diversification, depending on where you're at financially, is buying real estate, having Bitcoin, having a business that's able to produce income for you, and most importantly, intellectual properties. If you have anything that you're doing that's part of your business, you want to make sure that you have full ownership so that you're able to continue bringing in income that's under your business or under your name. In conclusion, just wanted to give a great recap about traditional saving account offer security but limit growth potential. Bitcoin represents opportunity for significant returns but comes with higher risks. A balanced approach consider individual financial goals, risk tolerant is essential. And last thing that I want to share with you guys, have you considered investing in Bitcoin? Do you prefer the safety of traditional saving account? Please share your thoughts in the comment below, because I would like to understand how you guys are utilizing the traditional saving account or just mainly buying Bitcoin and storing your money in a cold storage. And these are a couple of recommendations that I wanted to share with you guys. These are great books to read. Fiat Ruins Everything, How Our Financial System is Rigged, and How Bitcoin Fix It. With this book, it will give you a better illustration about fiat. This is one of the first books that I have read when I jumped into my Bitcoin rabbit hole, and it gave me a better understanding that our dollars are losing value every single day. The fiat is not helping us, it's really taking value from us living. Another good book is The Price of Tomorrow, Why Deflation is the Key to an Abundant Future. This is another good book that I'm currently reading right now because I want to continue educating myself about Bitcoin. And with this book, it will give me a better understanding that the prices of what we see today will change tomorrow due to technology, due to inflation. But with Bitcoin, Bitcoin is the deflationary mechanism that's stopping inflation from causing our life to be harder to live and also be able to maintain and increase our purchasing power. And the last and my favorite book is The Bitcoin Standard, The Decentralized Alternate to Central Banking. This is a great book to read for anyone that is new to my channel or new to Bitcoin. It will help you increase your knowledge, and also you will be able to continue going deeper and deeper into the Bitcoin rabbit hole, and that's when you'll be able to unlock your laser eyes. And before I end this presentation, just wanted to share a great website called thecryptocrew.com. This is a great website to go on to get your latest news. It's in partnership with the Atlanta Blockchain Center, a great central hub in Atlanta that's educating people about blockchain, cryptocurrency, and empowering everyone to utilize this new technology so that we're able to set ourselves free and also continue living this world that God bless us to have. And the last thing that I want to share is this tweet about growing your wealth in Bitcoin by Wealth Squad Chris. And this is his tweet that he said on September 10th, 2024. He said, "Look, y'all, we're going to build our wealth with Bitcoin. It's going to be a simple ride, not an easy ride, but a very simple ride. So 1,000 hours of research. 2, save 30% of your income in Bitcoin. 3, never use leverage. 4, self-custody or collab custody. 5, rarely use the sell button." I appreciate Chris for sharing this information. This is one of the brothers that led me to learn more about Bitcoin. And with me following him and seeing how he's growing in this Bitcoin space, it motivated me to go even harder by creating my own YouTube channel discussing about Bitcoin to educate everyone, to lead them into the right path. And yes, as we continue growing our wealth in Bitcoin, it will not be an easy ride, but it will be a simple ride. Just know you just have to hold tight. I know currently right now in our market, a lot of things are being sold off. Bitcoin have dipped almost 30% last week, but rebound back up to close to $95,000 as of yesterday. But right now the market is very bearish due to the news about tariffs and just the correction of what's going on in our space. So the best advice that I would like to share with you guys, do not sell your Bitcoin. Make sure you keep a strong mind when it comes to this volatility, because it will shake the ones that are not able to hold on for very long. And if you're able to hold on very long, you will receive a high risk of your investing in Bitcoin. So I believe you guys can do it. And if anyone need any advice or need someone to talk to about Bitcoin, I am here. I appreciate you guys for tuning in to my episode about how to build your wealth either in a traditional saving account or in Bitcoin. And I will continue sharing more information about Bitcoin with you guys. I appreciate you guys for staying tuned in my community. Please like this video, comment, share with someone, share with a family member, and let's continue growing our wealth in Bitcoin. I hope you guys have a wonderful day. Peace.